IndusInd Bank has plunged. 15% is the fall, and we are not done with the day yet. Markets are nervous that why there is a drop in their NIMs and there is a fat provisioning. Has the business turned for the worst, or this is just temporary and transient and it is not something which is structural for IndusInd Bank per se? Let's take that conversation forward. There are some answers and some there are important explanations which I think markets and our viewers would like to understand from the management of IndusInd Bank. Sumant Kathpalia, Managing Director and CEO of IndusInd Bank, joins us. I want to first start with season's greetings. Okay, stock is down. We'll talk about it, but it's Diwali time. So at least start with a smile on your face.
Thank you, Nakunj. Good morning and happy Diwali to you and your team.
The shareholders are saying that it's not turning out to be a happy Diwali for them. The numbers have disappointed on all the front.
Nakunj, you have to see the numbers a bit more in detail. If we go back to the numbers and see the numbers, of course, there is a drop in our NIMs. We are at 4.08 against our 4.25. There is a 17 basis point drop. There is a significant drop. But please understand, we slowed down on unsecured business, which actually grew negative 6% quarter on quarter. And we grew the secured business, which grew 4% quarter on quarter. As a consequence, microfinance business, which is about 10% of our book, which has a yield which is 12% higher than the thing, we lost about 12 basis point to 13 basis point NIM in the microfinance business itself. The second point which we have to take, we've always said granularization of liabilities is critical for us. We continue to focus on granularization of liabilities, and we did not stop the liability growth and granularization, and as a consequence, we grew in a very tough quarter, 4% quarter on quarter and 16% year on year in our retail deposits. And we could have slowed down that growth and saved some, and the LDR could have remained at 87, 88. We went down to 86%. And I think that's a cautious call which we took. In our opinion, I think the stability of the balance sheet and the prudence is much more important at this point of time than just showing growth. We want to show growth, but we want to be cautiously optimistic in showing our growth. There is fundamentally nothing wrong with the balance sheet and our growth.
Appreciate that. But if I compare your commentary of last quarter versus now, nobody saw this kind of an caution coming. So in 90 days, which is what we are talking about, what has changed for you to, in a sense, come up with prudent provisioning?
Okay, provisioning is a separate issue. I've always thought that fortification of balance sheet is very important. I was seeing stress emerging in microfinance, and it's reflected in our results. And I thought it's very prudent right now to create a contingency provision and keep it aside. You may not require it, you may not use it, but it's prudent that having a contingency provision and keeping it aside for bad times is a very, very good way of running a bank which has a cyclical portfolios of like ours. And I think getting a 2.2% of a book from of loans as provisions is a very, very conservative view to take on the balance sheet.
It's not surprising to see that analysts who track your banks, they have downgraded the estimates. They are raising growth concerns, and they are of the view that this stress in the microfinance business is not going to be a one-quarter phenomenon. Mr. Kathpalia, you understand this more than anyone else, that when the cycle reverses, it will not be a one-quarter phenomenon. Is there reason to get worried about the microfinance business getting into a cyclical downturn for at least 3-4 quarters?
In my opinion, if you ever look at the microfinance business during demonetization or during floods in Bihar or any other point, I think the microfinance recovery is the fastest During COVID also, it was the fastest recovery. We must watch out for two things. The thing to watch out is on the microfinance. A, is the funding happening and is the lending cycle improving? I can tell you in October, the lending cycle has improved. The loan disbursement process, we were doing 100 crores a day and now at 180 crores a day. So what we did in the whole of quarter 3 was about 7,000 crores. We're already seeing a 60 to 70% upside on that number already on the disbursement which you've seen in the first 15 days. So that's very, very important. Number 2, how many centers of yours are functioning and are viable? I think our 80 to 85% of our centers are viable and they are functioning at an efficiency of 100% almost. So that's a very, very important parameter in a microfinance. Third, I think I've always believed that in good times you make provisions and in bad times you take out provisions to manage your credit flows. In my opinion, even if the provision is a higher, we have enough buffers in our balance sheet to take care of it. So the disbursements are coming back. We have enough provisions in our balance sheet to take care of any downside. We are well fortified to take care of the growth as we go forward.
So let's now put in that microfinance business back in the aggregate kitty, which is that if I look at your loan growth for the quarter gone by, it was below 15%. It is also lower than what you've been guiding for and what you have reported in the earlier quarters. Can you come back to your loan growth of 16 to 18% despite this microfinance business for the full year? Can you hear me, Mr. Kathpalia? Oops, lost him. I think I had a tough question for him. We'll get him back. So let me just start recapping what he is essentially indicating. I mean, he's essentially indicating that, look, there's a microfinance stress which no one saw coming. And to be fair, nobody saw that coming. Unsecured category, we can get into what the Reserve Bank of India has been trying to attempt for many quarters, but for the moment, the stress is now getting reported by other banks also. Second, provisioning has been done because they want to protect the balance sheet, but this provisioning number is something which markets were not really prepared for. Is there been a growth reset, which is what I want to understand from him whenever he comes back? Has there been a growth reset in terms of the credit growth of 16 to 18%? Will this come below 15% with elevated NPAs and a ROA which is lower than 1%? If that is the trajectory, then the stock market reaction is justified. If that is not the trajectory, then the stock will come back. So, Mr. Kathpalia, we've understood the factors which created stress for IndusInd Bank for the quarter gone by. But I'll put this quarter and then talk about the timeline of the guidance what you've done. Your loan book for the quarter gone by was below 15%. It's lower than what you've reported in the earlier quarters and also below the guidance what you've shared with us. Are you still comfortable in calling out a guidance number for us, or the microfinance growth will have an impact on the aggregate loan book growth for the full year?
So we've said that I think we've always been growing at the right phase, and we've grown 13% this quarter or year to year. In my opinion, I think it's very difficult to give a guidance right now on microfinance. We are seeing growth coming back. We are cautious on our growth, but I think the growth will steadily come back because this is a festival season, and I think the half two of microfinance has always been better. I also see the vehicle finance growth coming back. The vehicle finance is going through a very tough period because the automobile industry's growth is slow. We are seeing some growth, green shoots coming back in quarter 2 in the passenger vehicles as well as in the commercial vehicles. So I think growth should come back in that business. We've never had an issue on the corporate side of the book and in the retail side of the book. So just leave out the microfinance, which we still, reviewing and saying what the growth should be. But I can tell you the growth, the disbursements are 70% higher than what it was per day on the last quarter. So that's the only thing I can tell you right now. But yes, our growth should go to about what we've said in a PC6. In PC6, we will meet our ambition of 18 to 22%. I think there may be some quarters where we have moderated our growth, but I think that's only fair because the microfinance industry was going through a stress period and we wanted to be cautious about it.
That's so.
On the ROA side, if you normalize the ROA right now,
Yeah.
we are at 1.29 if you just take out the contingent provision. And I think if you just add the growth coming back in the microfinance segment and in the CFD, which we already see, I think you should see us going to improving our ROA this quarter from what we are.
But sir, a provisioning is a provisioning. Now, whether it is prudent or whether it is in anticipation, a provisioning is a provisioning, which has dented your numbers. That's how markets are looking at it.
Yeah, the markets can look at it like that. In my view, I think what is more important as a prudent banker, I have to make sure that I've fortified my balance sheet. And that's what I've done. I don't want to not do a provisioning and later on say, oh, I did not have a provisioning. When I'm seeing some risk in the back, I saw some risk and I took the provision.
So what will
I may not use it.
Okay, so what will you tell your shareholders who are watching this interview and there is a flash which says IndusInd Bank stock down 15%? I mean, they are getting nervous. Would you assure them that business is on track? This quarter you will come back?
So the message which I want to give, Nukunj, is IndusInd Bank is on a solid foundation. I've been saying it time and again. I want to also tell our investors as well as our shareholders that the bank is very well fortified and is very stable. I think don't get carried away with the transitory phase which we've done to fortify the balance sheet. Sooner or later, you will see your bank performing at the levels very soon. You will see the bank performing at the levels which you expect it to perform, and we are well on our way to do that.
Mr. Kathpalia, I hope you'll appreciate the spirit of my question, and the market reaction is that 5 out of last 6 quarters, you've come out with good numbers. 5 out of 6 quarters. Markets thought that the turn was real. You were growing at a rate which was higher than the industry average. Everything was just going fantastically well for you. And then comes this quarter. So it's not that on a standalone basis, these quarters are bad, the numbers are bad. The problem is that there is a distinct departure in what you've reported as a trend versus what you've reported for the quarter gone by. That is the problem. And markets want to understand that what you've reported for a quarter gone by, I hope it is not a trend.
I don't think so. But like I said, you can't anticipate the growth at this stage. If the microfinance industry suffers a much more stress than what we are seeing right now, and the growth does not come back, then I think we'll have to find other ways to grow our business. But I think please understand microfinance, which is 9 to 10% of our book, has a 23% yield and is a significant contributor to our revenues and the NIMs at this point of time. So while I agree with you, I think there is a divergence to what we said, and I think we did it basis prudence right now. But in my opinion, I think this was the lowest quarter in my opinion on microfinance. Always in the half two, microfinance business is about 60% of the business happens in the second half, and even if it doesn't come to the normalized level, you will not see a declining trend. You will see an upward trend on that business. And overall in our business as a consequence.
So specifically in microfinance, since you mentioned microfinance being the red mark for the quarter gone by, it is 9 to 10% of your book and the yields are strong. Let's work with an assumption that the business goes nowhere and you consciously do not grow it, or the business does not come back the way you're anticipating. Then what happens to the overall loan book and the overall NIM picture for FY25? What we are discussing, sir, are numbers for the quarter gone by. What markets want to know are the numbers for the coming quarter and for the next quarter.
So in my opinion, please understand it's very, very difficult to substitute that. We have We have other businesses which are at 20-23% yield. For example, we've diversified the microfinance business into merchant acquiring business. I think we can scale up that business and get another 2,000 crores of growth out there to take care of that shortfall if there is any in the microfinance business. So I think we have a lot of levers in our hand. We've slowed growth on credit card and PL. We can scale up that business to make sure that a unsecured business remains within the range, within the parameters which we've set for ourselves. So I think we have enough levers to do that. To commit a NIM right now and saying that we will go back to 4.25 will be very difficult for me right now. I don't want to give a guidance of that.
Okay.
But I can assure you this is a transient phase and this is not a permanent issue with the bank. So may last for a quarter or so, but I think we should be back in our business.
Okay. So final question, what does that mean for your capital requirement? How things are positioning in terms of your total statutory requirement, given that your provisioning has gone higher and you would be needing capital if you have to maintain your historical growth rate, because your historical growth rate is above 15%. And if you are planning to grow at 15-16% and be providing for additional liability, NPAs are going higher, that means you would require capital sooner than later.
So we are at a CET of 15.6. I really feel that we will evaluate the requirements when we touch 14%. In my opinion, I think we are still. We will evaluate the capital requirements in the month of March. I don't think we have a need right now, and I think one quarter does not change our assessment of the capital. And in my opinion, maybe in the quarter 3 results in quarter 4, you may have a different commentary for us.
Over to that. Well, it may be a bad quarter, but a bad quarter does not mean that this is the new normal for IndusInd Bank. Like they say that form is temporary, class is permanent, and I would like to believe that for IndusInd Bank that this is a bad form or bad patch. All good players, they go through bad forms. But class always comes back. IndusInd Bank does have some class. The new app, what they have, Mr. Kathpalia has spearheaded the ship post-COVID quite brilliantly. So focus on the good. Yes, markets are disappointed, sir. We can't deny that. But that's the way how markets are in the near term. When they see a big change in what you've reported versus what has come out, I think some financial adjustment is happening.
No, thank you so much. Just one last message. It may be repetitive. The bank is in very good shape. I seriously feel this is a transient measure which we've taken for fortification of balance sheet. The bank remains fundamentally very, very strong and is poised for what we've said. And we will deliver the PC6 ambitions which we've set for ourselves. Thank you so much.
Let's wish Happy Diwali. Once again, we started on that note. Diwali is around the corner. So what, the stock is down. It's always a good time and never too late to change pleasantries. Happy Diwali and wish you a wonderful year ahead.
Happy Diwali to you and to the team out there, and I wish you a very, very bright year ahead. Thank you.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits and then break right through them. Become something more. It's my time to rise.